The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, 11 o'clock a.m. till noon p.m. And that would be quite a stay if it was 11 a.m. to 12 a.m. All right, so thank you to our great hosts earlier on. Don't forget, I'm going to mention it a couple of times because it's so important. Larry Pesavento this afternoon, 5 o'clock. Webinar. It's, if you can't just see it live, go to the archives. It should be terrific. All right. The Dow is down 36 at 18,509. The S&P is down 4 at 2182. The comp index is down 5 at 5254. The VIX index is up 68. Is that 68? Yeah, 68 up 3% at 13.06. And what's really interesting, here's the E-mini, the S&P E-mini. I've got a peak D. I'm going to run all the indices in a moment live because I want you to see how close we are, at least in the Chapman Wave methodology, to at least looking at a pullback. And that pullback doesn't have to be severe, but it could be a bit of a surprise because the market has just been holding in a trading range. This is a potential peak D in the E-mini. Finally, we recycled higher. Remember, that's the beauty of the recycle. You are holding the 9-period moving average, a really important index at this particular time, a key indicator for me, and that black line. And then what happened is you went to a leg D, you recycled the G, it couldn't be it was a G/B. So there's no H. So it had to be a C. And that puts us in a quandary because for 1, 2, 3, 4, 5, for 5 days, we still hadn't gone to that D. And yet the secret was that we were holding in a very narrow trading range, just as we did from July the 20th in the Dow, in that narrow range coming down before breaking to the upside for that leg D. Now, it's really important about the E-mini. You'll see that we're sitting on the 9-period moving average right now, 2181. But look at the 2 candles. Actually, look at the 3 candles that have been formed in the weekly charts. See that a doji candle of the week of the 12th of August, then the week of the 19th of August, a long-legged, not that long-legged, but longer than the others, legged doji candle. In other words, looks like a plus sign, opens and closes pretty much at the level that it opened the week and closed the week. Now the weekly chart has got another doji, but we're not even halfway into the week of, they're calling it the week of the 26th of August. So all I can say is this. The MACD is very good. The stochastic is holding at 97%. The on-balance volume is giving a hint that it is close to a turnaround. That's all it is. The monthly chart on the E-mini continuous contract is in leg B. It's the same as in many of the other charts, B or C in the Dow monthly. We've just pulled back to a leg D in the 120-minute chart to this up channel support line. Break that in 2176 is a 200-period exponential moving average. If you look at the stochastic and the MACD, a lot has to happen. You really have to see a move of about 5 points to the upside for the stochastic on this 120-minute chart even to get close to turning up, and the MACD is the same thing. So the pressure now is more to the downside, and I think that what we're looking at in the next couple of days is a rotation. You've got the money conference going on, the money, what do they call it? I told my subscribers this morning, it is... I'll see what it is again. I want to get the exact definition. So it is monetary conference. In fact, that's exactly what it is. Coming up, and what does it say? It says dates conference registration, 33rd annual money conference. No, not that. All right, I can't find it. Anyway, it's a money conference going on. I'm not sure what they're going to do. What are they going to do? It's a money conference. We've already got signals saying that there should be some short-term pullback, and that's really important. We are short. We have a couple of long positions. We've got our core positions long, and we're waiting to see what happens here. And we've added to the short position. So what we're looking at here is the E-mini is giving us big clues, and it's saying that in the 10-minute chart right here, you'll see the left side, right side price time match came to exactly, and then it pulls back, and it goes from the low of 320 this morning of 21.81, spikes up to a high of 21.87.75 at 5:20, goes sideways, then breaks down in peak B minus, and breaks down at exactly the left side low of the bar that I chose to be the important midpoint, the fulcrum level, the plumb line midpoint. Worked, and we've pulled back, and we went right down to a lower low of 21.78.25. So you have 3 bars, maximum 3 bars to close above the low of 21.80.75, and that did it right there, close at 21.80.75. So it manages. So that says now you can rally, and the rally that you go to is the previous peak of importance. That's the one at 21.82.25. I drew this in, folks in the den already saw me drawing this in at 11 o'clock. And I drew the V-shaped pattern there with the left side, right side price time match, saying that if everything's good, by 12:20, the E-minis should be testing the 21.82.25 level. And if that works, then the 21.83.25 level of the 9-period exponential moving average would be next. A break below the candle just a moment ago of 11:10 at 21. If the E-mini breaks 21.79, closes under that in the next couple of bars, not good at all. All right, let's go on with our story. So now what I said is I'll do this real quickly. The Dow, INDU. Oops, wrong one. I'll have to do that over. INDU. Okay, there it is, peak E. We haven't yet got a confirmed down arrow or sell signal. The technicals are very weak. I need a down close today underneath the 9-period exponential moving of 18,544. When I said to subscribers, under 18,500, that's a tip-off that we're probably going to be going low over the next few days. And it is a peak E if there's no new high above 18,668 this week in the weekly chart. The S&P, SPX.X, let's see, has made a G. No, it hasn't. It's made a peak F. It hasn't gone to 21.93.82. It's gone to 21.93.42. So that's going to be very important. But all of this is just suggesting a sideways to slightly down move. I'll explain it when I get back. But you've got a candle that's gone to a new high. There again, you've got doji candles. In the weekly, you're going to be watching them closely. Under 21.72, other things are happening in the S&P, and it's going to go lower. And above 21, I'd put it above 21.96. A close above that says, hey, we can keep pushing higher. QQQ series, there it is, peak E. We'll see. Watch this closely. 118.01 is the level to break, and 116.60 is about the level of support. Let's go to gold. Gold's down sharply. Gold down. Yep, gold down $15 at 13.30. There's that trend line that I keep talking about, that Chapman Wave inside track. Wow, what a wonderful technique if you can develop this technique. I call it the Chapman Wave inside track. It's a little mini channel at the top of a trend line, up or down, and on the bottom. And if the price keeps getting repelled or propelled from that level, it's significant. And it's probably a peak G in the weekly chart. I'll be back. We'll talk about bonds. We'll talk about crude oil. Basil Chapman, Tiger Technicians Hour. And the Dow's down 45, S&P's down 4 3/4. Be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. So we're back, and we're looking at crude oil, which is down $1.25 and 46.82. 46.82 is underneath the 9-period exponential moving average. Two things are going on that are really important. One is crude oil stopped dead at that 200-period exponential moving average at 48.73. It went a tad high. It went to 49.36. And what's interesting about that is that within the context of the MACD is still strong. The stochastic has pulled back from up in the 95 area. Let me give you the exact number. The MACD was in the 97.5 area. I mean, that is really high. It's 2.5 away from 100%. That's incredible. And now it's down to 85%, pulling back. So we've got to watch this very closely, because what I said is that the weekly chart is really important, had a fabulous V-shaped recovery. But when you give back too much of that, that's called the single leg A failure pattern. In this case, it's really a single leg B. A single leg A in the weekly, but a B in the daily, because it was just a slight little peak A back at 40, just over 44, and it pulled back a few cents and then went back on the upside for leg B. So that almost has the characteristic of a leg A. Now, if this market is going to be pulling back together with crude oil, which we've seen so often when they move together, what I'm looking at here is in the context of chart formation, the 45, let me give you the exact figure, 45, let's call it 45.40 to 44.70 area. If that's taken out, it's kind of very little support until you get to the 41.90, 42 area. So I'm watching this real closely. And since almost all the indexes that I'm looking at, and I can go through them, MDY is the only one that is in a C and needs to go to a D. But virtually everything, I'm going to go to callers in a moment, but almost everything, like the XMI made a peak C1, C2. That was a legitimate double top and has pulled back, making an arch formation. The NYA, I'm going to the more esoteric ones. The NYA made a peak E yesterday, slightly higher high. It's all ready to pull back, but the pullback so far says it could be more gentle than vicious just at this time, even though we've got short positions in place. That's kind of what I'm looking at. And it's still a market of stocks, because we have a stock that we bought yesterday on a dip and it's up very nicely now. The day is young, but the fact that it even ran up, it's up about 1.7%. No, it's up about, let me just give you the exact figure. I just wanted to show that it was up when in fact other areas are down. Is very important. It's up 3% when the general market is down 0.26, 0.22. That just says to me that this is still a case where you can find stocks. Now, let's go to Scott and Safety Harbor, and we will talk about other things related to the market with Scott. Hi, Scott. How are you?
Well, Basil, I think I won that last round with you. You had pot at 1550 pulling back, and I said I was getting in at starting at 1615.
16, right. Down. And now it's at 1680. Right, it's moving nose. Very nicely. Very good. Now, this is what I just wanted to tell you, because patterns are patterns, and we've got to respect the patterns. Otherwise, there's really no point in doing this if you're looking at particular formations that repeat. And this is one where you've got potash, and let me give it in a moment, A, B, C. Now, there are a couple of things that are going on. Remember what I spoke to you about? I said that there's like a down channel, I call it the inside track repellent zone, and that what you really want to see if you're in potash, you want to see it break into the 1680s, and it really has to try to get to the 17s to get rid of all the resistance levels from the downtrend lines. So I'm still in that camp, and what I'm looking at is there's a chance that it could go to a D above 16.97. And that 1697 takes it, if it's today, 1697, right there. That takes it right to the edge of this line. I have another moving average, the 200 period simple moving average at 17.10. So the fact that it's moving up today, when the general, it's up 0.24%, and the market is down 0.26%, I like the fact that it's doing its own thing. It's independent now of the market to a certain extent. So yeah, I'm going to do, what I'm going to say to you is, are you going to, what position this time do you have?
I started getting in, I got 10,000 at the 16.15, another 5 when it hit 16 for about 2 minutes. So I cashed out at the 16.80. But what I'm seeing now, charts aside, is just a general sentiment in the market. They're going to go for a safe haven, and the safe haven seems to be logically POT because of the fact that it's still at a 52-week low. A matter of fact, it's at a 10-year low. If you look back 10 years, I mean, this is I think it was $13.90 10 years ago, and a high of $42 at one time. So with everything else, someone used a term the other day, a stock can be fished out, like a little pond, and you catch everything, you pull all the life out of it. I don't think that the life pulling fish pulling has even begun yet on POT. I think we've got a lot of room there for things to happen.
So, okay, let me just show you. What I've done here is I've shown the very long-term chart of potash. POT is the symbol. It's trading at 16.81, up 4 cents. I go back. Actually, I can go back all the way to, I've got it notated with the Chapman Wave methodology going back to 2001. And it made a peak D back in the monthly chart in January of 2004, pulled back for a moment, started a brand new one, went to a high of 1279, pulls back to, at peak D, pulls back to 809 in November of 2005, takes a whole, what is that? It takes just 4 months, consolidates. Then it has a spectacular move. There was a period here at TFNN where in the den and everywhere, we were just looking at these commodity indexes and the commodity stocks, and they were just, you can't even say they were soaring. They were just, this is a real rocket ship to the upside.
I mean, it takes like a rocket ship going straight up at that one point.
And it went from $8 to a high of 80.54. That's a tenfold increase to a peak F top in the Chapman Wave. And then this thing had a way of consolidating very quickly in time. But in this case, it went in 1, 2, 3, 4, 6 months, a half a year. It went from 80.54, gave back a huge chunk of the gain. It went down to $15.85. So it's a brand new A, B, C, D, E, F, folks. If you're listening on your radio, you're not looking at it. It runs up. It doesn't go to the other high, which was at 80.54. Instead, it goes to 63.97, February of 2011, and then starts a really different kind of a decline. The decline has a left side, right side price time match, which goes from the low of the December of 2008, and I took it to a particular doji candle of July of 2012, and that thing came right in on the button at 14.64. It pulls back to the low of January of 2016. Seems to like the end of the year, beginning of the year, as turnaround candidates. I'm just a little concerned that this flat move, we've never seen a flat move like this for this amount of time. Something like it we had seen back in 2005. This is a little bit different in that it's come down from so far. So I like the fact that you've got it on your radar. I like the fact that you're trading it very well. I'm just going to say to you, it's bumping into that resistance line. I'm pleased you took your profits. If it pulls back again, you can do the same thing at about $16.45.
Thank you, Basil.
Thank you very much for going. Congratulations.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. Question of the day about IBB. IBB is at 298.89 up 271. There's this cup formation. We were short at 295.01. It dropped to 288. Didn't take the profits. Got out with a break-even trade for subscribers. Why? Because I did not want to mess around at all, because the stochastic was turning up. The MACD is not great, but the fact that it held the 9-period moving average made the pattern that I call the potential change from an H pattern to a cup formation like that. I'll have to enlarge this so you can see it. Let me enlarge this. Turns out that pattern, I call it the Sears and Roebuck pattern. Actually, it's the Sears holding pattern. Years ago, I did that in a weekly chart, and I suddenly realized we were short, and I covered. I think we made a little money. I covered, or we lost a little money, and then it broke out above that arch formation. In this case, 296.23. It broke out and it said, I'm matching. I'm not going to make an inverted V-shaped pattern. Let me get rid of that. In fact, what I'm doing is a cup pattern to retest the left side high of 299.98. I'm at 299.25. I haven't broken that level yet, but this is a really important moment. I should have made this gray. I was in a bit of a rush to do it. That should be a gray A and a gray B. Here I can do a little technical analysis, say a Chapman Wave analysis, and say if IBB closes significantly over 299.48, like 304, 305 in the next 2, 3, 4 days, instead of reversing down back under 294. That means that the moment it breaks 299.48 and goes to 299.49, I have to say this is now F carrying over from the previous high because it never took out the low. And that's an F/new B. And then I just have to deal with it that way because it's how it closes. It's the inverted a lowercase h pattern. And just real quickly, I want to go to our callers, but GDX, this is exactly the opposite. Here's the left side low of 27.44. If it closes more than 2 days, I'll give it 3 days because it's gold, the GDX. This is the market vectors gold miners at 27.94 down $1.08. If it closes under 27.44, I'm going to be quite strict. I'm going to make it 2 days, maximum 3 days. If it closes under that level, that's very negative and it's going to go quite a bit lower. If it bounces up from there and closes above, you could have a rally to the 29 level, maybe 29.65 before doing some retesting. Okay, let's go to our next caller. We've got George in New York. Hi, George. How are you?
Basil, good morning. How are you today?
I'm very well, thank you.
Yeah, we're very lucky with this summer thus far with the weather.
Well, we're lucky if we are not beholden to having a beautiful green garden. Other than that, It's been fantastic because if you've been on vacation like I was, it was just beautiful, no rain. Well, we did have rain, but just a snippet in the evening, so it was much, much better. And the other thing about it is that we've not had any drought. We have not any water constrictions here in Newton, Mass yet. So sometimes we do play catch up. We haven't had it yet. But in the meantime, so far it's not bad. But I must say, it's been tough to keep the lawn green. Okay, you'd like to look at?
Correct. Today I want to look at VRX, Valiant.
So this is Valiant Pharmaceutical International, 32.54 right now, per $1.34. Leg D in the Chapman Wave, very strong MACD. Stochastics at 88%, and this poor weekly and monthly chart is just horrendous. But the weekly chart has the MACD rallying for quite some time, and the stochastics rallying, the on-balance volume, everything's rallying. But the poor old price needs to break and close above 38.50 for at least 2 out of 3 weeks for me to say, okay, now it can start to tackle that very ugly bar of March of 2016, March the 18th, and that we had a high of 70.43, and unfortunately had a low of 26.72. The all-time low so far, not the all-time, the low of this particular smash to the downside is 21.65. This is actually a huge rally on percentage terms from the bottom, but of course, if you're looking at the top in the 250s, that's not good news. Yes, tell me your story.
All right. Well, truth be told, I decided to take a deeper look at it. And, again, I'm not looking at the anomaly where it was up at 263.
Okay.
But I'm looking at it from a different angle here. And basically what I'm looking at is, they have a lot of litigations against it due to them purchasing companies and starting to increase the prices. So you know with the accounting problems what's been going on.
So that really wait, how much of that is actual real public knowledge with the chance that most of the news is out and correct, and how much is there still as a potential surprise?
The news is fully out because, again, we have Congress, which is on their nice little vacation, So
Oh,
once
right,
they get
right.
back in September, they're going to start. And, of course, at that point, we should see, some little things going on where they'll probably investigate the Philidor division of Valiant, where they were using Philidor, which was a drug processing firm of theirs, to charge these exorbitant prices on some of the medications.
Right.
But aside from all of that, let's get to the nuts and bolts of the business. They own Bausch & Lomb. They have Jublia, which is for the toenail fungus. They have a lot of dermatology drugs.
Hey, I must say, that ad, the Jubilee or whatever it's called, that ad is a outstanding ad. It is really funny. It is good. Never even heard of it before until then.
So true. But going back to their other division, Bausch & Lomb, that's a very good division, as
That's
well
always
as Bausch
been,
&
yes.
Lomb's other companies that they own that build equipment and make equipment for cataract operations.
Okay.
So it's a very good company. But the problem is they have to clean up the accounting. And also, I think personally, the earnings are going to be lower going forward because now they have to get back to reality pricing on the medications.
Okay.
So with that said, my personal opinion, again, I'm looking at it to be a $56 stock.
So now the way you usually do these things is you do the fundamental
It's a
analysis based on
discounted
what
cash flow analysis. I am
Okay.
discounting the future.
Okay, so I've got someone in the den who says it will not matter if it becomes criminal. Yeah, that's true. But sometimes markets respond to the downside or the upside in anticipation, and that the actual rulings when they come out have just a much more modest effect. That's kind of what you're thinking, right?
Possibly, but if you remember back when with the Merck scandal with Vioxx, it took several legs down, and it took over the course maybe, give or take, over 2 years before it started to iron out and base out. So if I look at that, or if I look at, let's say, Diamond Foods, remember the nut company?
Yes, yes.
So, I look at that, but what I try and look at is the nuts and bolts.
Hold on. So George,
Yes.
hold on a second. We'll wrap it up as soon as I get back, because I've also got early waiting. We've got a break coming on. Hold on a second. We will do
Yes,
the
I
wrap
will.
up as soon as we get back. Thank you. Folks, down 35, S&P down 4. We'll be back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks, we're back, and we're back with George. We're going to wrap up the little conversation. Everyone here that I know of always says, George from New York, we got to listen, because he always has some really good longer-term calls. So, George, you're liking Valiant Pharmaceuticals, VRX. It's in leg D in the daily chart. Very strong technicals. Weekly chart has improved, but it's a horrendous chart. This is where the daily is going to have to lead the weekly. So you're thinking that it has your cost analysis says that the price it should be at, if lawsuits etc. don't really smack it down.
Yes.
Is in the 52-ish area.
Yes, I would say 56 I have it earmarked for.
Okay.
53 to 56.
So 52 is the 9-period monthly moving average.
Remember,
59
I'm not
is
saying an immediate price appreciation. I'm
absolutely
saying once
right.
it starts to recover within maybe a 2-year to 3-year period.
Okay, so that's I like that, because what I'd be looking for right now is I would like it to pull back towards the 28, 26 level very briefly. It should do it like for 1 week. And then I want to see it go to a leg C or even extend this leg B. If it does that, I would say that it's discounted a great deal. You still cannot ignore sudden smackdowns because of a news-related thing, especially when Congress gets involved. But I agree with you that this looks like it is trying to base for the first time, the last month and a half.
And
that's nice
why
basing
I was calling,
area.
because that's what I wanted to find out from you. Because on the retracement is when I wanted to add to it.
Okay, so that I'm going to recommend to you have a little patience. If it doesn't get there, that's fine, because we'll do the analysis and see where the next level is. But between 28 and 26,
one final
yes?
note I want to make to you. One final note.
Yep.
On August 22nd, they just hired a new chief financial officer.
Valiant Pharmaceuticals International. Joseph C. Papa has assumed the role of chairman and chief executive officer, as previously announced, and he succeeds J. Michael Pearson. The Den gave me that. Zitao in the Den just posted that.
Well, that's the CEO. That's the CEO. Now I'm talking about the CFO. And the CFO is the chief financial officer.
Right. Okay, and
he's going to straighten out the accounting. He just came from Zoetis, which is a division of Pfizer.
Oh,
so
okay,
now
got
we're
it.
starting to clean up our acts.
Okay, that's great information. I've got ZOET, and let me just put that in. Oh, I can't remember the exact symbol. But yeah, so we're going to keep that in mind, and those are the levels. So 28 to 26 is where I'd consider adding. You could even give me a call just before you're about to do that, and we'll go through it again.
Excellent.
Thank you so much for calling. Always appreciated, George. George from New York. Great calls. Let's go to Ernie in Dearborn. Ernie, how are you?
Not well. We've got some health problems in the family, but we all eventually go through that. And you know, it's very entertaining listening to George.
White lightning.
Pardon me?
White lightning to all. I just say white lightning to you all. May things improve very quickly.
Sure.
Yes.
And George is a very interesting guy to listen to. Whenever he calls, I really pay attention. He has some really nifty ideas. Anyways, I'm calling about Sarepta, looking for your thoughts.
Okay. Do you have any position at all?
Yeah, along at 25.
Okay, along the 25 and it's $27.99. Have you had it for the round trip or is this fresh money?
Fresh money. Well, I mean, I've been in several times.
Okay, but right now this is a fresh 25, so makes it much easier for me. And I'll tell you what I'm looking at. Sarepta Therapeutics Inc. trading is SRPT 27.96 up $1.72. Leg D, peak D back in August pulls back very sharply from the 27s to the 23s. Now it's at a nice spike on the day. It had a high of 28.80. Right. I'm calling this leg E/B. Now, a reason why I would normally just say, hey, it looks to me like a B because from peak D, the stochastic pulled back sharply, the MACD pulled back sharply. I just need a little bit more evidence that it's the fact that it pulled back so sharply just intraday from 28.80, a point already down when the low was 26 something, 26.10 or so. So that says to me, just on the day, this looks like it's kind of, there's some news relationship. So I'm just going to say to you, I love the fact that you entered at 25. Even though normally I would say to you, this is where you should not take a loss at all because you've seen a nice gain. This is different. This has, the chart formation says it's trying to tackle that incredibly sharp decline from 36 to 12 back in January, the week of the 15th. The fact that it's gotten this far into that bar says to me, you know what? I'd be prepared, I don't know whether you are, but I'd be prepared to give my 25 entry a 1 point stop. And because of the 1 point stop, it says that I would be giving back about I'd be giving back about 8% gain right now, but that's really not the purpose. The purpose is that this leg D in the weekly has very strong technicals. The monthly chart is not a very good looking chart, but the fact that it's rallying into the area of $30, and that $30, if it can touch $30, I think it's like a magnet. And it means now I can say to you that every time it pulls back to the 26s, it should repel. It should quickly try to get back to the 30s. So I'm going to say to you, it's a little different case in this situation. I don't think it's market related, so you can treat it as an independent stock, almost like Valiant, that it's got its own life cycle. I'm going to say to you, I would look at it as a potential $32 to $35 stock.
I'm looking at 34, by the way.
Okay, so that we're in agreement there. But two things have to happen. I wouldn't let it go under that $24 that I say that's the stop that I would have. That's number one. I would even say to you, you know what? If it actually gives back and it comes back under 26.30, I don't like that. I don't like it only in the sense that it might need a little more time and a little more price, and you'd probably get a better entry point. So keep that in mind, 26.40, but absolutely on your core position, that 1 point start from your entry level, I would not let it get there. Now, here's the other thing. If it does have a spike into 29.20 to the 30.50 area, by this time was Wednesday, by Monday of next week, Monday or Tuesday next week, what I would do is, and you haven't got any extra positions, I would treat that position that you got, I would split your core position and say 1/3 of that position now has to have a raised stop, and the stop would be just under the high that was made on the 4th of August of 27.97, 27.96. I'd say take a little bit off if you manage to get that big gain, and it then pulls back. Because what it's going to say is it's now making higher levels of consolidation, and it's really making higher highs and higher lows. That's the theme that you want. Hey, congratulations on a nice entry, Ernie.
Thank you.
And let's hope next time you call, everybody's much, much healthier.
There you go.
Thank you very much for calling. You too. So, folks, we're about to go to a break. I'm going to put it up one more time. I don't want to run away without doing this. This is the GDX, and I can't remember. Did I actually do it? I know it did it in my mind. I think I did. I think I said if it closes under 27.44. I'll do that when we get back. It's important. Enough people are looking at gold stocks, and I will be back and we'll talk a little bit about these gold stocks. Basil Chapman, beeper going off as always. I'll be right back after this message. Dow's down 46, and here is the 10-minute chart.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks. Sorry I wasn't able to get to all the emails. I'm in a different system. I had to shut one down, and the other one is a little slow in picking up some of these things. I did want to show. I'll do them tomorrow. I'll check them out, and I'll do them tomorrow. Crude oil. Here's a really good example of the Chapman Wave single leg A failure mode. Remember, I talk about this a lot, that sometimes you get it could even be a B and then an A and a B, but a very brief A, as I spoke about it just in the chart earlier. And this spiraled up, crude oil. It went from the, just after 9 o'clock, 9:50, it went from 46.59, and within, look, 11:10. It spirals up to 48.32. Then what happens? These are 10-minute bars. It just keeps coming down and down and down and down. This was yesterday, sorry. And then it comes down. And that's that single leg A to the upside. You get single leg A's to the downside. They have a slightly different connotation. Don't want to deal with that. Yes, the 10-minute chart, and then I'll go to the GDX, and then I'll go to a couple of questions that were asked yesterday, and I'll try to get to those. So this is the arch formation fighting the V formation. The V has failed. The arch is in place. This is going to be an interesting few days. We've started setting up some shorts, and I think that the chances are that the upside is really limited. The downside is actually limited, but I think what we're looking at, I'll do this real quickly here, is this is the pattern base. This is the Chapman Wave formation that we were looking at, waiting for a 5 to come in, and the 120-minute chart, that's the Elliott wave. But I said there's a match between the top of July the 20th, 11,622, and those 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, about 20 days before we broke to a new high. 18 or whatever it is days. So I don't think it's going to be that much at this point, but I am thinking that we're just going to make modestly lower highs and lower lows, unless there is a news event, because we've already got the trigger for some kind of downward move. I haven't got a trigger yet. I have to wait for the close today to get a trigger for a down. I put the down arrow in only because we touched the 9-period moving average again yesterday. It's like a magnet, anticipating there'd be a down move today. I shouldn't have done it, but I felt I had to because it was a peak E and it took so much time. So I put the down arrow in. That says we're in a sell signal on the daily. I really need to wait for the close to see that we close below the 9 EMA. So that's that. Now let's go to GDX. So the GDX, if I look at the GDX, it's the weekly chart that if it continues down like this, I immediately have to put a down arrow. And that's saying that the daily GDX, the gold miners ETF, is in fact in a sell mode in the daily, and it's just started a sell signal. I really have to wait. I'm not going to say I haven't got the down arrow yet in the weekly chart. I have to wait. But here's that single leg A in the monthly chart. So we could pull back quite sharply. We can go 27.81. We could even come back to the 23.96. Is the dollar acting well against this scenario? Well, the dollar is up nicely, but not great. It's up. So I'm interested in this whole thing because the dollar hasn't really spectacularly broken out to the upside, but the gold hasn't yet broken to the downside. The gold miners have been much worse than gold itself. The gold is just in the weekly chart. It's in this rectangle formation. Our area, if it closes under 1318, let's call it 1300. That's a big negative. So Basil Chapman about to sign off. Let me do this. The VIX index is rounding some. The VIX is now up 84 cents at 1322. If the VIX in the next 2 days closes above 1371, something's happening here that suggests that we are confirmed in the daily and the Dow and the daily S&P for a sell signal in the daily charts, not yet the weeklies. You talk about where you would cover. Where would I cover some GDX? That's the question. And the question is, it's at 27.85. At least for today and tomorrow, let's say the 29.80 to 30.30, I'd cover some. I don't think you need to cover just yet. I think we're going lower at this particular point in the miners because they had such a big move. This is Basil Chapman. Thanks for being here. Please don't forget Larry's webinar tonight. I think it's 5 o'clock Eastern time. I don't miss it. If you can go to the archives, check the archives out because that's going to be a very important webinar. I'll be back tomorrow. Have a great day. Check out my opening call. I think you'll find it very
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.